Canadian actor, producer, and all-around awesome human being, Kerry James stopped by the set the other day. He's probably best known for his work in the Canadian TV series Heartland. He started to ask me some pretty good questions, so I said, hey, let's sit down and record this. Here's the raw interview. I hope you enjoy. Kerry, thanks for joining us. So you're giving me some hard-hitting questions. So you said, what did you just say in the kitchen?
Well, like my experience and understanding of finance is nowhere near as comprehensive as yours. So I think I represent kind of people in general in terms of coming at this with a little bit of like skepticism and fear.
Yeah.
And like I've been exposed to things like The Big Short and learned a lot about like tranches and what AAAs and double A's. So how does someone like me, how do you trust banks? Can you trust the bank?
Yeah, I mean, banks are fundamentals of the Canadian economy. You have to have trust in your banks.
But the same was true of America, was a mortgage-backed securities, and that pretty much defunded the whole country.
So here's the thing. There's always going to be something that's completely unexpected. So we're always going to be able to plan. We're going to plan for everything, plan for every alternative risk that we can possibly come up with, but there's always going to be something that comes up that we are unexpected.
Does Canada work with the same sort of mortgage-backed securities that America does, or are we different?
Well, so we have these new products that get created, and then we don't have regulation to cover it. So, for example, if you look at cryptocurrency, there's no regulation.
And I'm a big Bitcoiner. I have an enormous amount of Bitcoin.
But there's no regulation, right? There's no regulation. So if you look at it as a store of value, it's like totally speculative, right? It's not a good store of value. So if you're going to use Bitcoin to go down and buy muffins at the store, how much is it going to be worth from the time that you left to the time that you got there? But let's go back to your previous question. So this idea of unpredictability of the future is actually a core concept in investing, is knowing that there's going to be something unpredictable that's going to happen. We just don't know what it is. We don't know when it's going to happen. So you have to diversify your assets so that you're not just having maybe mortgage-backed securities or banks that are exposed to mortgage-backed securities, or the entertainment industry, which is exposed to COVID, or companies that are exposed to Y2K, people freaking out. There's always going to be something. So you have to have a nicely diversified, structured portfolio. And like real estate, you want to have like industrials, you want to have consumer discretionary, you want to have finances, you want to have utilities, and so on and so forth. So that this very question that you're talking about, these unpredictable events that happen, that you are going to be okay no matter what.
So you protect yourself through diversification.
Yeah, I mean, it sounds like a really boring, non-sexy topic, but
not
it's
to
so
me.
fundamentally important to success. Yeah. Diversification is really key.
So one of my biggest fears, and this might be something entirely, was the fact that, a banking system, I see a bank as a business trying to make its own success. So it makes...
Any business has to make their own money.
To make their own money.
Yeah, they got to make money. Otherwise, what the hell are they doing, right?
I have this weird sense of like, no, I only want to make me money. It makes me feel, I'm not sure where that comes from, but... Well,
I think... I might be going down a rabbit hole here, but there's been this narrative in Canada that it's not okay to make money. But if you, as a business person, I know you as the sound guy, but or whatever you're filming or you're doing product, you have to take risk to do anything in life. If you're taking risk to make a film or a documentary that we were just talking about, you have to have reward for that. Otherwise, why are you doing it? You can either have emotional reward. You can have financial reward, or maybe a combination of both, or impacting your community, that kind of thing. But money makes the world go round. You have to have money to pay for stuff.
I completely agree.
So these companies, they have a moral responsibility to the community? Yes, especially when you become so fundamentally important to the Canadian economy that without you, things are not going to be a going concern.
Like the country fails, in a sense.
Well, not maybe that the country fails, but you just have such a big impact on a lot of, if you have, 80,000 employees, that's, you have some responsibility. It's like the social media person, right, who goes on camera and they're talking about beauty, but then maybe they're not a good role model for, all the young girls that are following them, right?
Gotcha.
It's the same kind of thing, so.
And then, so as far as unpredictable things that could deeply influence problems with banks, because I like to follow trends and patterns in terms of what I can see. So I look at pensioners and that retirement age, and then I look at the modern workforce and how, in my opinion, how little they're leaning into the system in a way that actually bolsters or helps the system. So is that like something
Sorry,
like...
I just want to quantify that. So the young people are not leaning into the system?
In my experience, perhaps not making the best financial decisions or life and career decisions. So I'm kind of like watching, a lot of people I know just keep getting further and further into debt. And between that and pensioners, I have this fear coming up that like investment rates in that are going to spike. Is that something you guys
in
look
yourself?
at?
You have fear. Are you thinking about, is that a reflection of fear in yourself?
Yes, in terms of buying
that you're
property.
not going to be okay?
Yeah.
Yeah.
Yeah, exactly. Like I'm hesitant to buy property this year, anytime in the next 4 years, because I have this idea in my head that that mortgage rates are going to go way up.
Okay.
Is that unfounded?
Well, is the property for your house, like is it going to be your principal residence, or is it an investment property?
It would be an investment property.
Well, in all things in life, it has to be a balance. Whether you're eating too much or exercising too much is equally probably maybe not good for you, right? It's a balance. You want to have like balanced diet, balanced amount of exercise, good sleep. It's the same thing with your investments. You want to have a balanced approach that's healthy to your investments. So, but it also depends on your skill set, right? If you're a property developer and that's what you do all day, every day, and you develop properties and you have specialized knowledge, go for it. But if you're someone who's, working in film, or I work in finance, I'm not going to be, I can't develop properties. I don't have that skill set. So you want to focus on what you're good at. And then as far as the rest of it, make sure you have a balanced approach. So if you have investments, you can have investment property, but you want to make sure you're not taking a one-way bet that one asset class is going to outperform the other.
Gotcha.
Victoria, if you look at the 30-year history of a detached residential property, I think it's been about 1.5% less on average than the S&P 500. I did that a few years ago, so it didn't include the recent property price spike. But it depends on where you're investing. So on Vancouver Island, there's a lot of people that retire here. Typically, prices won't crash, but they'll kind of flatline for a long time.
Yeah.
If you're in a heavily resource-based community, you can have boom and bust. And you can have a property for like 10 years, you overpay.
Yeah, those things kind of happen.
Yeah, so you have to be able to cover the cost of your investments. You want to make sure you have enough rental income to cover it. If interest rates are going up, that's something you have to take into consideration.
Very cool.
If you have other investments to balance out the investment property, then it's a balanced approach.
Okay, I have another question, and it's not designed to be, it's not supposed to be hard. I'm just curious because... Yep. I had mentioned that I had, a few years ago, had recently put like quite a bit of money into Bitcoin. And I feel lucky because I got it right at the bottom.
Yes.
So even when it's dipping, it's still a fortune to me. But why is something like Bitcoin maybe a bad idea for your average person?
Well, I don't think it's a bad idea. I just think it's a bad idea when you have narrative-based investing or speculation. So if you're putting all of your money into Bitcoin, it's a problem.
Definitely a bad idea.
Yeah.
I wouldn't do that.
So where you have these crazy wins is where someone takes an outsized bet. But that's not really healthy. So you always want to look at what happens, not if it wins, but what happens if I lose?
Yeah.
That is always a question that people don't ask themselves because they see the potential for success, but they're not looking at the downside.
I tell everyone that the same thing, like never put more in than you are willing to lose at the table. Like that's with those higher risk things.
Exactly. Or what happens if things don't work out the way I thought they were going to.
Yeah, totally.
Yeah. So if you do sort of scenario planning for the future, that can help mitigate a lot of risk. So I don't think it's a bad idea. I just think it's another asset class. Is it speculative? Yes, you have to understand that. But again, diversification within the balance of your overall portfolio. You can have Bitcoin.
All right, last question, and this one is maybe a little bit ignorant, but it's born of a bias inside me, which is why...
There are no stupid questions.
I love it, thank you.
Yeah.
So when I originally, about 4 years ago, was going around to find a financial advisor and someone who could get me into like the bank's mutual funds and that, my first question was like, can I see your portfolio? Why should we trust someone at a job who isn't already succeeding to the point of being unreasonably successful? Like I was like, if you're not a millionaire at this, why should I take your advice?
You're not a millionaire at this.
Is that ignorant? Like
No, I mean, I think they should be able to show you their portfolio for sure. I mean, if somebody comes to see us, it's like, well, yeah, this is what we've been doing. This is our model portfolio. We've been running it for a couple decades, right? But, people have their own, everyone's life story is different, right? So I'm a single mom. I got 2 kids. I got a divorce. So their own personal situation may have impacted their personal finances, but doesn't mean they're not successful or good at what they do.
Not necessarily related to the two things.
Yeah, I mean, you don't have to have, $5 million to be a successful investment advisor. You can be really good at what you do, but, maybe you're starting out, or maybe life threw a few curveballs. I mean, that's what happens, right?
True that.
Yeah.
Thank you so much.
Any other questions?
I think for now that's definitely kind of what I was coming in with in terms of. Do you have any advice for someone like me?
I think when you're talking about trust, when you're learning to trust an investment advisor, they're typically relationships that span decades, hopefully, if it's a good relationship. And a relationship, like anything, is trust. You don't get trust like that. It takes time to build trust. Somebody doing what they say they're going to do, meeting their commitments to you, being there when you call them, calling you when they say they're going to, all those things. So it takes time to build trust, and you have to trust your instincts. If something doesn't feel good, you should address it. Advisors will answer, a good advisor will answer any questions that you have. If they can't provide an answer to you, they should say, I don't know that answer, but I'll give it to you. And if they're not willing to answer you, that's probably a bad sign.
Well, after talking with you, I think it's clear that I need to let some walls down and start one of these relationships with an investor.
Well, I don't know about letting walls down. I mean, so walls go up from, I don't know if you've had bad experiences in the past.
I did. A little bit was my own fault. I positioned myself in the wrong way, and I made a few bad choices with the wrong people, which is why I have trust issues moving into banking and that.
So it's always a good idea to, check out somebody's reputation, ask around about them, interview a couple different people, and experience counts. It really does.
I really appreciate this. Thank you.
Yeah, that was great. Thanks.